I'm not going to dwell too much on the introduction to Benchmark, because most of you will have heard that before. Just to say that we are a company that's not too much like most biotech companies, in the sense that we've been around for a long time. We've been in business since 2000, and we tend to describe our company into two halves. First of all, we have the trading business, which is the long-standing existing company that's successfully been growing for many years, and occupies markets, makes products, and generates profits. And then we also have the second half of our business, which is more like a biotech company with a number of development programs and innovation streams which are producing new products and which are in our pipeline, and where we're making investments, and we describe this as the investment side of our business. The core markets that we're in are all growth markets: animal health, sustainable production, aquaculture, massively growing market, and of course the overriding picture with Benchmark is one of a growing business that's investing the funds that we've raised in first of all our IPO and then in our secondary raise to build a much larger and very successful business for the future. To do this, we have what we believe is a world-class team, and we're investing in expanding our research programs and our scientific research, and match that with building high-quality production facilities. We should start by updating you on the acquisition. I guess most of you know that we, towards the end of last year, we purchased two of the world's leading salmon breeding companies to begin a fourth division for us. What we call that Benchmark Breeding and Genetics. And these companies are Salmabreed, a Norwegian company, the #2 player in the world, and Stop & Fisker, an Icelandic company, which was the #3 player in the world. The merger, the principles behind the merger was that these two companies each had unique qualities which, when combined, would create world-leading player in the business. Salmabreed has very high quality genetics. It's a long-standing company. It's been in the business for a long time, and has been at the leading edge of animal breeding, and one of the lead players in development of new tools for gene typing, new genomic tools for increasing the rate of gain in genetic selection. Stop & Fisker is also a world leader in its arena, which is in the production arena. Stop & Fisker is recognized as having the state-of-the-art production facilities, the most biosecure facilities, and on top of that, the capability to provide production salmon eggs, breeding eggs, out of season. That means, as you probably know, salmon are seasonal breeders. In the Northern Hemisphere, they breed from November through to the end of March, and that is problematical for the industry in a number of ways. It causes inefficiency in production, and there is a strong demand to produce out of season, which means you'd be able to supply eggs all year round. And Stop & Fisker is the only major breeding company in the world that can do this. The deal completed on the 19th of December, so we're now a month into the ownership. Integration is going extremely well. The two teams fit together well. There was no need to do any rationalization, and in fact we are, we're seeing the teams already working together extremely well. Also, the acquisition was well received by the major producing companies. Most of them have signaled to us that they've received it very positively. I think they like it because we're creating a strong competitor in the market, so that there's now two strong players in the market. I think they also like it because we're putting the resources of PLC behind the future development of these two companies, and the capabilities that they bring together when they're combined. When we put the best quality genetics into the best capability to produce, gives them many of the things that they want for the future of their businesses. So it's been extremely well received by the producing community in the salmon breeding arena. And we are already starting to see many of the synergies that we expected to see come through from this, and we're also seeing some of the sales momentum starting to generate. We're seeing that sales starting to tick up. So the acquisition itself has been very successful. We're very pleased with what we've got. We haven't found any skeletons in the cupboard, which is always one of the major worries when you make a big acquisition. And the merger has gone very smoothly.
The annual report published yesterday. We want to first of all orientate ourselves and remind ourselves that this is the year to September 2014. In Q1 of that year we IPO'd, and I think to characterise the year we would say that it was a year of growth and also a year of investment post the IPO. We saw top line revenue growth of 28%. That was driven by growth across all of the divisions of the business: animal health, sustainability science and technical publishing. In addition, we saw increased synergistic activity between the divisions, so that we've seen commercial recharging between the divisions increase a little as well, which we think demonstrates the synergies that we've talked about previously across the business. We're pleased with that growth in mind to be able to report that margins on our animal health products and our services were maintained at least. And the overall gross profit percentage for the group has declined a little, but that's as a result of our deliberate strategy to diversify our revenue streams. So that's de-risking to some extent the business. If we look at the investment that we've been making in our trading businesses, first of all, we have been building our infrastructure as we've previously outlined. Malcolm mentioned, I think, our high caliber team, and that's an extremely important facet of the group. And during the year to September, we increased our headcount by 40% as planned. On the chart on the page there for headcount, you can see that we've superimposed the number of graduates, and the growth rate in those is the same at 40%. I think that demonstrates, at least in part, the high caliber team that we have. We've reported trading EBITDA, so that's the result from our existing trading businesses, in line with market expectations, in line with our analyst forecasts, and similarly trading EPS. We presented a chart there that just allows you to see how that was impacted by the IPO in terms of number of new shares issued, so you can clearly see the underlying trend. Then if we turn to our investing activities, you'll remember this is where we break out below that trading EBITDA line the way in which we've been deploying largely the funds raised at the IPO. And two particular areas of focus there in the year 2014 were R&D and also investing in establishing new service operations in the animal health division. R&D, when we combined together actually expensed R&D and acquisitions of intellectual property that we made in the year, was $6.5 million, up from $900,000 in the prior year, so a six-fold increase, demonstrating the deployment of the funds in that area, that important area for us in terms of developing and growing our new product pipeline, which we'll come on and talk about in a few minutes in more detail. In addition, that expenditure on getting those new service operations, diagnostic labs, to the point of commissioning and launch, and therefore revenue during the year was $1.7 million, and subsequent to the year end, those labs have launched. Then briefly looking at the reported result for the period, a loss of $1.4 million, which is in line with expectations. We've presented a chart in the centre of the page there that allows you to see how the trading EBITDA on the right reconciles through to that loss. I've already talked about the two largest areas of investment on that chart, R&D and pre-operational ventures. We also saw IPO costs at a total of $3 million, but 1.6 million of that expensed as exceptional costs. And also our amortisation charge did increase somewhat. Depreciation and amortisation was up at 1.4, but again that reflects the increased scale of the group as we've made 5 acquisitions in the year and also acquired some intellectual property on the R&D, under the R&D heading. The balance sheet reflects the deployment of funds again, so the net assets were up significantly as a result of the IPO, and then we've During the year, added 9 million of capital additions. 3.8 million of that is the acquired intellectual property I already talked about under the heading of R&D. The acquisitions, the 5 acquisitions, brought a number of intangibles with them, totaling 1.3 million, and then 4 million on tangible assets for various capital projects that we've talked about before, and we'll give you a little bit more of an update on in a moment. Cash flow wise, we saw pre-exceptionals, a small 800,000 inflow from operations. We've been busy deploying the funds from the IPO. We've covered most of that already. Just for a point of clarity, you'll see that the R&D in this chart, the cash flow chart, is 0.7 million. That's specifically the initial consideration on a licensing vaccine technology that we've mentioned previously. There is deferred consideration as well. And the Zoetis acquisition, again, that we've talked about before, is within the acquisitions column on this chart for cash flow. Closing cash at 16.5 million reflects the fact that we'd raised enough money to cover several ongoing projects, and of course, subsequent to the year-end secondary raise has increased our net cash position, currently at around 43 million pounds.
Okay, some operational highlights, starting with animal health. So this year we launched 3 products from the pipeline during the year and 1 just after the year end. It's been a big year with a lot of activity with new development projects. One big one was the signing of the agreement to produce the HyperCat product. This is with a Swiss company called HyperPet, who are medical doctors working in research on human allergies. And they are working with a research team at Oxford University who have researched a vaccine platform called virus-like particle technology, or VLP technology. And they put these 2 technologies together to create what is really quite a major breakthrough. And the idea behind it is that we vaccinate the cats to, in effect, make them autoimmune to their own protein. And so the protein that causes the allergy in humans is not produced by the cats at source, in effect. There's quite a big market for this product. It's something like 250 million, we believe. And we expect that the development trials and the licensing processes will take us through to late 2017, early 2018. We completed this agreement towards the end of the summer last year, and we're now getting to work on the development program and making progress with that. We also set aside £20 million to expand and develop our vaccine manufacturing capabilities. Work on this is already well advanced. We're on to phase 2 on our Braintree vaccine factory in Essex. We're building a new antigen suite. And that work is set to complete somewhere later this year, towards the late summer, early autumn. And the planning phase for the development at our Edinburgh plant, the Biocampus factory, is also now well advanced. We've increased the plans. We've increased the size and scale of the plant so that we're able to manufacture the HyperCat product when it comes through. We expect to start very soon on the building there, and that should complete in the middle of 2016. We've been increasing our global outreach. This is partly through the development and launching of new diagnostic laboratories using all the modern diagnostic tools like histopathology and qPCR. First of these has opened in Norway, where we'll be servicing the very large salmon industry there. And the second is in Bangkok in Thailand, where we'll be servicing from there the large and very fast-growing Asian aquaculture industries. There's more work on this coming. We're planning two more laboratories in Latin America for launch this year, 2015. As Mark mentioned earlier, the pipeline, as a result of our increased efforts in R&D and our increased resources going into that area, we've increased the pipeline from 30 to 47 products with a very large potential addressable market of just under 400 million. And of course, we were also busy making some strategic acquisitions. These are very targeted acquisitions. The first is Zoetis, aquaculture vaccines business, which brought a number of valuable assets, including development vaccines and vaccine technologies, and also two smaller veterinary diagnostics businesses, which expand our footfall into new territories. The next graph on page 11 is designed to give you a feel for what's happening in the pipeline, how we're progressing there. You can see that what we show here is all of the products in the pipeline, and we put them into these graphs in their product groups and in the stage of development that they are. And as they progress up these bars, they head towards achieving their license. And you can see the 3 products we launched this year where they popped out the top and have been actually taken to market now. We value this in 2 ways. We look at the addressable market, so that if you assumed all of these products went ahead and got a license, that would give us an addressable market for all of them of something just under 100 million. However, that's not very likely to happen. There will always be some that don't make it through the process. And so we also do an NPV valuation where we look at how far advanced down the process these products are, and we accrue more of the addressable market value to them as they progress through the process. And then we do an NPV discount using a discount rate of 13%, which is the rate that's used by our industry for this kind of evaluation. And that gives us an NPV value of something just over £100 million. So all of the products in that process, we value them this way, amount to something like £100 million.
Looking at the divisional financials, the highlights here were the revenue growth that I already touched on when I was talking about the group. We are pleased to say that across the division, that growth was contributed to by all of the 4 main revenue streams. The largest revenue stream and one of the significant contributors to that growth was our own animal health products. At the same time, as I mentioned for the group, we maintained margin on each of those individual products and revenue streams. Again, the mix has pushed the divisional percentage margin down a little, but as a result of diversification. We've seen investment in the headcount in particular in this division. In fact, year-on-year 48% growth in headcount, which is very much to invest in the infrastructure and capability to deliver our future growth plans for the animal health division.
Okay, well, as Malcolm said, the pipeline is a significant part of Benchmark's future, and to deliver it, we need access to specific types of trial facilities, and it's particularly relevant to us in the aquaculture sector, which is a big portion of our pipeline. At the time of the IPO, you may remember we had just completed, just prior to the IPO, the acquisition of a marine research facility, a place called Arto in Scotland. We've been since then working on essentially rebuilding it, putting in new pipework, and securing the site there to allow us to run full trials going forward. Those first trials will be coming in at the end of this month. We're operational in phase 1, and then we move to phase 2 to give us more space, allowing us to run more than one trial at a time. It's critical. There are very few facilities like this in the UK. This is one of 3, so we were lucky to get it. It has required investment, as it says here, 1.8 million, but it will be the world-leading state-of-the-art facility by the time we've completed that. Likewise, we've done the same at Oxford. We've built a vaccine testing facility there. The bovine and ovine vaccines that we're producing have to be batch released. They have to be tested on the species that they're going to be used in to make sure that the efficacy is at the correct level. And we've built a facility to take our vaccines through that, and that is now operational. In Brazil, some of you remember we have a farm there. We've tenanted it. We've had it under tenancy for about 7 years now, 8 years. We're in late stage planning to build a tilapia hatchery there. Tilapia is the second big species, the biggest farm species in the world, but in terms of industrial growth, after salmon, it's the second next industry, if you like, in aquaculture and in fin aquaculture. We will build that hatchery. That'll start later this year once we've secured the purchase of the farm, which we're in late stages of doing now. And we've also seen an uplift in the consultancy contracts this year, not least because the sort of blow-up of Tesco has triggered a review of supply chains, you can probably imagine, and we've been talking with all of the major supermarkets over the past few weeks in terms of working with them on that re-engineering.
The financials for Sustainability Science Division show growth on the top line, 46%. Organic growth, i.e. the existing business pre-acquisitions, was around 18%. Spanning across the 2-year period, we made 3 acquisitions in this division. We've been busy investing in the infrastructure in these sustainability science businesses across the board. For the opportunities that we see coming for the acquired businesses in particular, we've been putting investment into, for example, Allen Environmental that we acquired near to the end of 2013 in order to scale that business and push it forward into future growth. That has driven some increase in the OPEX for the year for the division, but obviously, as I've mentioned, that's deliberate and strategic in terms of delivering future resource for scaling the overall division.
And lastly, technical publishing, it continues to grow. We've launched more products and services this year. The core business, the advertising revenue is up, but we have, you may again remember, we have over 6 million readers, and our main opportunity is to supply those readers with products and services. One example of that is our distance learning program. We have a 9% rise in student numbers on that, in uptake on that. We've gone into new markets. Our fastest growing website is in Russia. We had a launch. We launched it on the back of a conference. It's in the dairy sector. It was highly successful. It was oversubscribed, and it's a model that will now grow. So people want to receive information and be part of a network that can interface with them on this knowledge transfer through multimedia. And actually, conferences is one of those. People still like to meet, even though they'll get a lot of the information online throughout the year. They still want to meet with their peers, and that's an area where we're going to expand. The first UK one will launch this year, and that'll be in the aquaculture sector. You'll remember we bought Old Palm Publishing. That brought in 400 new titles and the revenue streams to go with those. But it also brought in 120, in fact, now increased from that, about 130 new authors. That gives us an increased capacity to generate our own content for not just the books but also the website. So we're in a phase of slightly restructuring the way in which we deliver editorial in that business, and overall the sales are up.
Yeah, and that, in terms of the financial highlights for technical publishing, converted into revenue growth of 23%. If you strip out the Old Pond acquisition, which was right at the half-year point, then the underlying business grew by 17%. We'd seen costs increase. We've discussed before the stepped cost nature of this division. We've been strategically going through a step in the cost base during the financial year. That's now leveled off and stabilised, and really now the model is one of pushing for revenue growth in order for a good proportion of that to drop to the bottom line. We've also seen some impact of mix as we diversify and we expand the publishing part of that division. That has some impact on margins, but again is a good way of leveraging the asset that we have within the agricultural markets.
So, the outlook. Well, we believe that we are successfully executing the growth strategy that we set out at the time of the IPO. And we are optimistic about the opportunities ahead. What we mean by that is that we don't see those opportunities diminishing. In fact, if anything, they're getting bigger all the time. And the resources that we pull together, both in terms of people and financial resources, mean that we can access those opportunities. We're very well placed to do that. We see continued development of the product pipeline and strong progress with acquisitions. These are targeted acquisitions. We're not making acquisitions just to fuel growth. We are targeting areas that are important to the development of our business, and they're areas where it is better for us to acquire that position than it is to grow it organically. It's a part of the way in which we grow the company, and will continue to be a feature of the company going forward. And as we almost always have been, we are evaluating a number of targets right now. We've been successful in continuing to diversify revenues onto the the existing product base. So for example, Salmosan is no longer our largest product. Salmon genetics is now our largest product, and the transforming acquisition of the breeding and genetics division has started really well for us, and the early indications there that all the synergies and the growth potential that we saw when we set out on this path will materialize as expected going forward. So this has been a very busy year, but a very successful year for us, not just in terms of achieving our financial targets, but also in developing and growing business for the long-term future.
Well, thank you, gentlemen. Congratulations on very good progress and a very succinct presentation. I remind people who haven't already submitted their questions to do so via email, but we already have quite a few, so diving straight in. We've got one from James. It sounds as if the reaction from salmon farmers has been very positive so far. In terms of setting targets, will you be looking geographically at markets that already exist, like Chile, or are you going to be driven by future potential and look more at Asia, or will it be a case of taking the opportunities as they arise wherever they are?
Initially, there is a lot of growth in the existing markets. The salmon industry is performing very strongly. There's the growth demand is, in fact, the production base is struggling to keep up with the growth in demand, which is running at about 7% per annum at the moment. So we've got growth in the existing markets. We've also got opportunities to expand our production base, our breeding production base, into some of the big fast-growing markets like Chile, where there will be some advantages to doing that. So I think we will see in due course, maybe not immediately, but in due course I think we'll see us going down that path. There are emerging markets around the world, as you say, China, New Zealand, Australia, the USA, to name but a few, and the demand for salmon is encouraging people to start production in different parts of the world. Currently we can access those from export from Iceland, from Stop and Fisker. I think in the short, medium term we'll continue down that path. And then in the longer term, in terms of Asian markets, yes, there are opportunities to grow out of the base that we have in salmon breeding and take the same technologies, the same techniques, the same science on into other species, and that is definitely on the agenda, and there are opportunities coming forward for us to begin that program. So I think that we will be seeing that happen.
Okay, thank you. And obviously lots of questions relating to aquaculture. Rebecca's curious, in terms of the management of the new division, did the key individuals at Stop and Fisker and Salmon Breed know each other beforehand? Presumably yes, but did they know each other well? And how regularly do you intend the management of that division to meet on an ongoing basis?
Yep, they are meeting continuously at the moment, so there are different groups, the genetics team, the production team, sales and marketing teams. They are now working together, pulling together the two businesses. They knew each other, but not well actually. They were kind of operating in separate markets. Salmon Breed were very strong in the world's #1 market, which is Norway, with some smaller business in Scotland and the Faroe Islands, whereas the Stop and Fisker had a presence in every market in the world. From Iceland, there are no export barriers, there are no trade barriers, which are often there as a result of disease. Iceland being a disease-free area and then very biosecure production allowed us to export into every market in the world from Stop and Fisker. So the two were in slightly different markets. They didn't know each other that well, but they are working together extremely well. And I think both sides are excited by the opportunity to bring together the good things of the two businesses to create one in effect, highly advantaged salmon breeding company.
We've never done an integration of two teams so easily. They've been a joy to work with, and they, as Malcolm says, they're working hard together. We haven't had any problems at all.
Yeah.
I think they're also pleased to be out from the previous ownership because they were constrained to some degree in terms of their own aspirations and belief in the business. They couldn't grow, and with us they can grow as fast as they want, as fast as we can help them and support them to do so.
In terms of how often they meet, we have formal board meetings every month, and the management have their own management meetings dealing with the operational matters much more regularly than that.
Recognising that you three aren't market makers, I think there was some surprise from some of the investors out there on the fall in the share price yesterday. Can you offer any insight as to why you think the results were received so poorly by the market?
Well, we've been told that it was mostly retail investors who were either profit-taking or decided that the headlines that were reported on the results were not as strong as they maybe were expecting. I think maybe some people didn't look past the initial figures into what we were doing. We were investing the proceeds from the IPO, and obviously there were substantial costs associated with that, and we had to build the company in readiness for for the growth that's now coming, and so we had to build our infrastructure. So there were costs associated with that, which were planned, and which we we've come on. The results show that we've come in line with, very much in line with. So I think there may have been some initial nervousness caused by the headline figures, but I think that's settled down now, and we expect to see the price ticking back up again, to be honest.
Okay, going back to aquaculture again, and following on from some of the earlier comments about diversifying the skill sets that you're building in salmon and applying it to other fish. You've said that's definitely part of the agenda and mentioned tilapia. Could you give, it's Nigel asking this question, give us an idea of the scale and importance of salmon in the market? It's obviously a very sensible place to start. It's growing, it's being driven by demand for sushi and other factors, but how much does it dominate the market relative to other fish like grouper or so on that you might look at?
Salmon is a very strong, has a very strong market in the northern hemisphere, and has grown a big market and a growing market in the southern hemisphere, partly on the back of the tremendous success of sushi, as you mentioned. It's not the biggest fish farmed by any manner of means. There are a number of species that are bigger. The global shrimp industry is bigger. The tilapia industry is bigger. Sea bass is actually bigger in terms of volume. Carp is the largest species farmed currently, particularly in China. But it is the most developed, and it's one of the highest values. So the salmon industry have been very clever at building an industry that is almost a commodity industry, but maintain pricing and a premium position in the market. It's a premium product, particularly smoked salmon, obviously. But and so it's a very high value business, and it's a very successful business, and it's continuing to grow. And we think it's very likely it will continue for a long time. I think some of the other species will come up alongside it. Grouper, for example, is a good one. It's an excellent product, and there are a few challenges to solve in the farming of grouper, disease challenges. And once they're solved, I think that can be a very large species. I think of Seriola, another species that goes into sushi, has great potential for the future. And we are bound to see tilapia continue to grow strongly. It's quite easy to farm. It's a good, efficient producer of high-grade protein. So, particularly in the developing world, we're going to see a lot more tilapia production. So the opportunities in aquaculture are really very significant.
Okay, thank you very much. And then I think it's time for the last question, which is from David. It's about your evolving share register. Clearly, having been listed for only a year now, it is a process of evolution. But he was just curious approximately how many shareholders you think you have on the register at the moment, and whether now that the anniversary of the IPO has passed, whether any staff might have been selling some of their shares with lockups expiring. Obviously, if they're not disclosable stakes, you wouldn't expect them to be named, but he's just curious how the confidence internally is whether it's as strong as it should be.
Yeah, okay. Well, we have a growing number of major institutions on our share register, and they are the major owners of our shares. There's something like 30 institutions. In the secondary raise, we picked up another 7 of the majors. So that was part of the success there. And there are, last time I looked, I'm not sure exactly how many there are today, but there was a rapidly growing number of retail investors. I think we've well over 100, but I'm not sure what the exact number is. We could check and find out. In terms of management selling shares, that hasn't happened yet. We've had retiring or people who've left the company, well, 1 or 2 of those, maybe a couple have sold shares in the recent rounds. But no, in terms of people still working in business, that hasn't really happened yet. And I'm not sure that there's going to be too much of that. I think we will have some shareholders, retiring, people who are retiring. We like any other reasonable sized company. We always have some people coming to retire, and most of our employees are shareholders. Something like 95% of our team are shareholders. So, when people retire, they are likely to want to, crystallize their nest egg at that point. So we will always have some, but I don't think it's going to be a flow of selling shareholders.
The current shareholder list rather has 269 entries on it, so it's a good assessment of the scale.